has a tax code which is given by the HMRC, and most general tax code is ending with a letter L. So every tax code has two parts to it. One is the first few numbers, and the second is the letter which is ending, and they both represent a really good information. The number represent that how much tax-free income you have in this year, and the tax codes are revised every year. The letter shows about the allowances which an individual is linked to and entitled, and we'll go into more detail of it. So very commonly for the current year 2021, the tax code 1250L, if you have, which indicates you have a tax allowance of 12,500, a tax-free annual income, and after that onward you start to pay the taxes. So and then the letters, so let's say if a tax code is ending with M or N, this could be indication of that they are couple, and they have between the both partners there is a tax sharing arrangement of the marriage allowance. So either one is transferring in, transferring out, and other one is transferring in. L is the standard personal tax code, and T is any other situation decided by HMRC. They have their own way of deciding, looking at individual tax affairs and changing circumstances. S represent Scottish rates. And other commonly tax code used, let's say if you're starting your a job first time, and you might end up with the first payslip with BR, just because they are not able to establish your tax code because you may not have given them the P45. And in the absence of the tax code, most of the time the employer uses the BR. That means you will be taxed at 20%. Now, as soon as your first place goes to the HMRC, they within few days now, because of the RTI system, they tend to send an updated tax code to employer, which ensures that if you have paid higher tax, which you are not supposed to, then it get refunded into the next payslip. Anti-tax code is used when someone is an overseas worker and they are not taxed in UK. And 0T is also given when the HMRC believes that they have used their tax allowance and it's nil for whatever other personal incomes or any historical information or anything. A lot of time the one regular query comes from employees to employer that my tax code is not correct, and we always go back and say to advise the employee as well as employer that employer cannot act on behalf of employee for any tax code queries. It is employee who need to contact the HMRC and understand it. And if HMRC has made any error, normally because of the RTI system, they sends that information ASAP to the employer, and next pay run, employer should correct the tax code. Okay, so how does the employee, as we mentioned about the PAY reference earlier, how does employer gets it? So if anyone is employing you, they must be registered with HMRC and get their own unique PAY reference number. With the combination of, and then they collect from you your tax code when they enroll you on their employment as part of their employer contractual process. Using the tax code, they will calculate the tax due from you on each pay period. So whether they are operating weekly, fortnightly, or monthly pay period, the tax code will be calculated using the softwares and your own tax code. Now, tax code can only be used for one employment at a time. There has been, in my experience, I come across so many times where an employee coming back and saying after year end, HMRC is chasing me for the tax. And because they have they probably had 2 or 3 jobs running at the same time, and they given everyone the same tax code. Nowadays, because of the RTI system where HMRC gets the information very frequently at each end of each pay period, the chances of that is very less. But just ensure that you're not using the tax code twice at the same time for two employers. If you have more than one job, which is a practical possibility, Your second employer should use the BR tax code as you mentioned earlier and tax you at 20%. Or you can request HMRC to split the code between two employer and then they will send a new tax code to HMRC. This is where the additional tax codes will be used by the HMRC. As I mentioned earlier, HMRC regularly reviews individuals' tax positions and then advises employers with any amendments. Normally, the tax codes are renewed every year before the start of the tax year from the 6th of April to 5th of April every year. So we'll soon have, as per the budget, we'll soon have a new tax code, most of us. Moving on to the next part of your pay slip is the NI contribution, which is in full called national insurance contribution. You probably see either NI on your payslip or national insurance contribution. It was mainly introduced to fund social security benefit, i.e. NHS services, and many more other social benefits evolved over the years of that, the history of the benefits. The payment of national insurance also gives the right to certain benefit, and most important is the state pension. It is very, very important that you every year as an individual, you qualify, your years are qualified for the state pension. And when it comes to the further down the presentation, I'll talk about that. NIC are slightly, they assess slightly different from the tax perspective. They are based on the week or month, etc., instead of a pay period. Directors are exempt from the cumulative tax basis. So directors are exempt from the weekly or monthly rule. They can have their NIC on a cumulative basis. Now, as employees pays their contribution, employer also add their contribution as per the applicable rate. So that you, so as an employee, you get two lot of national insurance contribution in your national contribution pot. If you are the employer of your own company as well as employee, then of course you are paying two lots for yourself. Moving on to next point, the national insurance. So for employees, there are many national insurance classes. Here I only mention about two which are affecting the employees. Class one, which is based on their day to every pays run which happens, and at the moment the rates are like if they earn more than 183 a week and under the age of state pension, they are eligible and their NI deduction will happen through the pay slip. Class 1 or class 1B, they are mainly based for the benefits. So any any other benefits you get outside your pay slips from your employer, this becomes applicable for employer. Employees don't pay any NIC on benefit in kind. Again, we'll cover that when we come to benefit in kind situation. Quickly, so what is the pension? Very common word is used for most of the employees is auto enrollment, which is started a few years back, where every employer need to assess their employees and put certain staff into that workplace pension scheme, which is very commonly called automatic enrollment. So you are not, as an employee, you are automatically enrolled into it. You can opt out if you choose to, and if you feel that the benefits you are getting are not as good as you want, but you have to opt out. Employer has a responsibility to put you in, and employee has make can make a choice. Employee also get the tax relief on their contribution, and there are different methods of it, whether relief at source um, or getting the credit through HMRC. The current contribution rate, which are still applicable, I believe, are the 5% comes from the staff and employer is giving 3% contribution. All of these are automatically calculated through the various threshold using the various payroll software. So as an employee, your choice is either to be in or out. You cannot decide to change. You can decide your contribution to be increased, but your employer contribution will stay the same. Right. So as I mentioned about the benefit in kind earlier, which could be used for some sort of a tax saving if planned properly. These are normally any perks or any other benefits received outside your normal pay slip. Things like company car or private medical insurance, because company is buying it for all the employees, so it could be a lot cheaper, or companies providing cheaper rate or interest-free loans to their employees. And in these cases, they could be classed under the benefit in kind, and there is a process employer need to follow every year to inform HMRC. So they are not taxed on your payslip, but once the HMRC receives the benefit in kind information from employer, the employees will be taxed on that value of the benefit, which is again, there are various method HMRC has given to calculate those, and depending on your own tax rates wherever you are. However, as an employee, you don't pay any NIC on that benefit in kind. Employees still need to pay an NIC, which is currently at 13.8%. So as I mentioned, that there could be some benefit, and just looking at a very simple calculation, if let's say you are getting a 30,000 salary, which you are not taking any other benefits, and you're paying an NIC of 12%, I'm ignoring all the limits and threshold and everything just for a simple calculation, you will pay 3,600 a year on NIC. Now, if you can spend 10,000 through your company, through your employer on your car, and instead of paying it out of your net received salary, then your NIC would be only on the salary basis. And sorry for one mistake here, I should be saying annual salary instead of monthly, but that's fine. If someone wants to have 30,000 as a monthly salary, is not also bad. So your NIC would be 2,400, because you don't pay NIC on the benefit in kind, and that means you're making some savings on the NIC contribution. Um, Company cars are being used historically as an options for rewarding the employees, and also for the some sort of a tax plannings. Now, government has announced a lot tax efficient benefit and kind charges for the electric cars, and I've just listed here on the screen few example from CO2 emissions 0 to 59, and the next 3 years percentage charge, which as an employee would get added into your total pay for that particular car. So if you're having a 100% electric car, which would be in the first bracket, and that means that you are actually not paying anything next year, 1% and 2%. Whereas if you have standard, all the other branded cars, non-electric, the rates, as you can see, going up, going 14, 15, 16, and they keep going up as we go down toward the more CO2. So if you have an option, this could be another way of making some savings. Moving on to director's pay. Now, if you are a director of your own company, then this could be useful. First of all, director pay is not subject to national minimum wage, so you can pay yourself £1 a month, or £1,000 a month, or whichever the amount you want to pay. The important point I want to bring it here, that and I see the what should be the optimum pay for a director, because director, if they are also shareholder, could have a combination of a pay plus the dividend. So in this my working, I assume that the director is also the shareholder. Now there are two lots of limit for the national insurance. The first is the lower earning limit, which is 6240. When you go above that earning, you are qualifying for the your that particular year is marked as qualifying year for the state pension. So that's very important. If you're earning less than that, you're not been marked qualifying for the state pension. Now the second earning limit is 8820, and if you go above that, you start to pay the contribution for national insurance. So the bit here is that as a director, because you are not um, limited by national minimum wage rule. If you have a privilege and you're staying between these two rules, then there could be a combination, could be some sort of a, again, a savings on the NIC, because if you don't pay more than 8820 to yourself, you are not paying the national insurance contribution but still qualifying for the state pension. I'll quickly go through a simple example, again ignoring lots of other facts. Let's say if you have a salary, you don't withdraw a salary and only the dividend because you're the shareholder of your company. You on the first table, you will end up paying a corporation less. Again, I've used the same rate at the moment, 5,700. And if you're maximizing the full dividend, you are getting 24,000 in your hand as a dividend, but you are not qualifying for the national insurance because, as I mentioned earlier, the dividend don't have a national insurance for employ the people who are going to receive that. um, the optimum salary could be that you are again keeping the profit before 30,000, and if you withdraw 8820, your taxable profit will reduce to 21180, and then you pay the corporation tax at 19%. Your net profit of 17,000, and if you take the whole of that as your dividend, you end up in your hand 8820 plus 2580, but you're also qualifying for the national insurance. That means you're qualifying, you're accumulating the qualifying year for the state pension, and also you have the tax savings. So it's very simple and quick working. Depends again on the individual circumstances how it will apply. Moving on to the bit more now, understanding just various parts of the payslip. So this is just an example. It should have the name of the employee, the month it belongs to, and name of the company, the employee's details. So this one is the BR tax code, national insurance number starting with letters, ending with a letter, and then the table. So the A is the very standard national insurance table. Payment, so this one is getting monthly pay. Any deduction happen, tax, national insurance. Next is the pension, the auto enrollment. So in this example, they're using the Nest to manage their auto enrollment services. Then at the bottom, again, summary of this month. So what is the taxable gross, the and the employer NIC. So this is the extra bit which employer is paying into your NIC contribution. Um, and then after, year to date information is also important. So you can always see how, as the tax year goes further, you can see how your income is, the breakdown of your income and what you are getting the net pay. So the year to date should have like gross pay and employees insurance, the tax, employers national insurance, and any pension contribution made by employees and employer. So this is a very standard format. It's just one of the example. As far as the payslip format covers the minimum required information, it is good. The more they provide is better, because an employee can understand how the breakdown and any other information they have, and reduces the queries in future. Okay, so that was about understanding the payslip. I hope I managed to cover most of the points. I'll move on to the now tax relief for job expenses. I see personally this area is forgotten, and not being maximized by lots of individual. And I'll go through this information and see if it is helpful to yourself. So what is the job expenses? Now, as an employer, wherever you're working, they are allowed to pay out the expenses which are related to your or the for the work. So for example, you're traveling from one place to another place, or you're working from home, and they have given you an additional phone, or they're contributing towards your phone expenses and things like that. So they are allowed to pay, and they can pay, and there is no tax charge if the expenses is reimbursed actual rather than as a lump sum amount, without any backup. But as an employee, if you are not getting relief about, sorry, reimbursed about certain expenses from your employer, and you believe that they are related to the delivery of the job. So if you don't have that, then of course you won't be able to deliver your job. Then you could be eligible to get some tax relief on those expenses. And few things I've listed which are very, very common to in use: working from home. If you have to wear special uniforms, especially let's say you are in the medical professions, or you are a construction worker, or in a food factory or anything. um, Again, vehicle you are using which has to be other than your regular place of work, so you can't get reimbursed for going to your job on a daily basis. Any professional fees and subscriptions. So if you are paying for your own registrations with the regulatory bodies, not because of your choice that okay, I want to, let's say, get registered with this body, but as how they are helping and contributing into your job. And any travel and expenses, or you have bought the equipment. And in the current scenario, like for last whole year, lots of people have been working home, and this could be a good opportunity. You can see whether the expenses you have incurred have been reimbursed by your employer or not. And if not, then you could get benefit from this. Because when you're working home, you're utilizing your home services, all the utilities, the heatings, the lights, and etc., your internet. And maybe you bought your own computer or your own desk or laptop or anything to make sure that it's working. I'll just go through a simple example again on this one. The two brackets are 20% and 40% taxpayer. Now, working from home, a very standard calculation by HMRC is like £26 a month, which is tax free. However, if you have a very, very special case and you can justify that actually my cost is more, then yes, it could be used as well, but depending on again circumstances. But if let's say we use the small one, uniform, I just put an example. Let's say you have to do it. I know from a medical professions point of view, especially the nurses or doctors, they have to wash their uniform, let's say at a certain temperature. And if that is costing £1, you're washing it every day. And 48 weeks I've taken just because working weeks, taking the holidays out when you are going and having holidays, you're not washing your uniforms. So that could be an amount. Professional fees, just again taking an example of your medical or accounting or any other trade profession, you have to register. Vehicle, travel, equipment, let's say you bought a laptop, and that is all amounting to, let's say, 1752. If you are at a 20% taxpayer, you could claim back a saving of 350, and if you are a 40%, 701. Again, it's just a simple working to give you some thoughts about your own personal situation, and then you can work how. Okay, right, let's say if I'm eligible, the next question, how do I claim it? You can go back to 4 years. So if you have this situation from a long time, you can go back for 4 tax year. You can do this claim when you are submitting your self-assessment return, or if you are not registered as an employee, you don't have to register for self-assessment. But let's say if you are, because you got some other income, then you use that. Or on the HMRC website, if you search for job expenses relief, and you'll be able to go through their website and just submit a claim without being registering for the self-assessment. For the previous years also, you can do the same thing. So if you're doing your current return for March 21, when we end to the tax year on 5th of April after that, you try there, you can see if this is useful, and also see if you can obtain some refund for the previous years. Okay, moving on. Allowances. So I'm briefly going to touch the points of dividend, ISA, and the pension allowances. Um, Coming to dividend, again, this applies if you are a shareholder of the business. Um, as we all know, dividends are paid out of the profit after paying the tax. Dividend don't have the NIC charge, as we also, as I mentioned earlier as well, for employee, but employer, sorry, dividend don't have an employee or employer both NIC charge because it's already paid out of that. The current tax-free allowance is £2,000, and of course there is a separate calculation to do, but it is in a way effectively a tax-free. Any dividend you take about is would be taxed at their individual tax band, and the rates at the moment are 7.5 if you are on a basic rate. So if you are on a 20%, you're paying 7.5 extra tax on those dividends, and higher rate and additional rate would be paid at those extra rates. But again, the point in this one could be that because you can save on an IC charge, using the optimum salary, still being qualified for your next state pension qualifying years, could be combination, again depending on the situations of the as an individual. ISA, I'm sure a lot of us are aware of it and utilizing this, but it has evolved over the year. They started with just one cash Aisha, but it is evolved into four types now. It gives an opportunity to individually, to every individual in the UK to save their earned income, which you already paid the tax and everything, um, a, an ISA account, and any income generated from that saving becomes a tax free. Once you withdraw out of it and then you regenerate, you generate any further income, that is taxable. So as far as the income is, the initial savings are sitting in the ISA account. The four types are cash ISA, as mentioned, that started at the very beginning. You got stock and share ISA, innovative finance ISA, and lifetime ISA. Lifetime ISA has bit more restrictions on it, and the age limit, who can apply for it, when it can apply, and what it can be used. um, stock and Stock and share ISA and innovative finance ISAs are used by lots of uh, investment platforms, whether they are properties or shares and everything, where you could invest your amount and then invest it from your amount into the further projects, and any income generated on those would become tax free, as far as is that the initial generated income stays in the ISA. If you withdraw and then you use it for something else, from that point it becomes a taxable, the further earning becomes a taxable. The max limit for 2021 is 20,000 per individual. So if you if so for example, every person has that limit, and you can use that in any combination. Either just put all 20,000 in one type of ISA, or split your investment into different as per your own planning and need. And there are various providers who can help you to manage your ISA, from your banks to a lot more other third-party providers, and you can always search on those in on the Google. I'm sure Google have a lot more information than what I can share today. Moving on to the pension. So we talked about one part of the pension, which was auto enrollment during the payslip understanding. Now, pension is the way we all know about this word is that you're contributing today to receive a benefit when you retire. Um, it also helps the government in terms of people. Government want to encourage the people to plan for their own retirements, and that's where they do gives lots of benefits on the pensions now, to encourage all of us to do. Three main types, and there are many more, and it's a very big subject in itself. So I'm just touching a very few points here. So employer pension, which we one of the example we talked about at auto enrollment, or your pension, your employer could have a different pension schemes. State pension, and also self-invested personal pensions, as known as SIP, is also very well known, especially for the further investments from the pension boards. Now, benefits, what can get an employer? Why should I invest into the pension now and wait for the future benefit? First, of course, everyone, if you have a surplus income and you can disposable income and you can save it, it could be a good option. But if you're done through the employer, then of course your employer is also giving some contributions, which is an extra benefit. You get tax reliefs, depending again on the schemes. And if as an employer, if they are providing those benefits to employee, they are the corporation tax deductible for the business. So the businesses do also get some benefits on it. Again, future returns when you retire all depends on various different circumstances, things changing, and etc. And I'm sure at some point during this series, the Jitu team would have some further sessions on pension, which hopefully give you more in depth of it. But it does need its own session to cover all the points of pension. Just as a simple summary of the pension side, oh, sorry. Okay, let me just zoom it properly. As it's not zooming. Yeah. Okay, just a quick summary. So annual allowance, currently tax-free annual allowance is a 40,000, and there is a lifetime limit of 1,073,000. These all are current number. They are subject to change as and when HMRC or any other factors decide. Um, if your pension pots are more than the lifetime allowance, you usually pay tax on it. Tax reliefs, basic rate tax can be relieved at the source, or pension scheme provider can claim from HMRC. Anything above, if you are above basic rate taxpayer, then you can claim additional relief by your self-assessment. And again, your tax advisor or your accountant can help you with all these things. When you withdraw from the tax pension, yes, there are implications, tax implications on it. Again, I would suggest that it's a good planning tool, but just discuss with your advisor to give you a very specific assessment which fits your current situation and your future goals. So that was about the pension. If I move forward, I think this is bringing me towards the end of a session. If I have rushed through, uh, please excuse me for that, just as because this is a very, very vast topic and try to cover everything is difficult. I thank you all for joining today and giving me opportunity to sharing some of the things I learned. And I thank you to Jito UK for giving again this platform where I can share my learnings and my knowledge with lots of people and who can get benefited. I'm open for the next step as per the plan of the Jito. And if there are any questions, I'll aim to answer them. If I can't, then I'll take a note to come back as soon as possible.
Thank you, Mayan Bhai. Can you please stop sharing this screen?
Yeah.
Thank you.
Wonderful.
Mayan Bhai, how much time do you have?
I'm
Because I've
available
got
for
a
another.
massive list. I've
Yeah.
got a massive list
Okay.
of questions here.
Yeah, we can do another 10, 15 minutes.
Okay, I'll give you 2 minutes to have some water while
Yeah,
I'll quickly run through a few slides.
wonderful. Thank you.
So, Jito UK is arranging future events, and especially for networking for the members only event on Tuesday. We are looking forward to meeting our members. We will try to do it every 2 months or quarterly. In this session coming on Tuesday, we are expecting some of our colleagues from or partners from Belgium chapter as well, and few small presentations. So we look forward to you attending that session on Tuesday 16th. It is evening 8 p.m. Please register on the website. The next session, upcoming section, is on 20th of March, Tax for NRIs. This is important because quite a few people have asked us at Jito board to get more information around what is the obligation. Some of them have received HMRC letter. Hey, you have not shown Indian tax returns here. So it needs to be addressed. So that is the next event coming up. So please sign up for that. We are planning other events. One of them is a digital marketing masterclass, which will be on 25th of April. In early April, there is another event being scheduled, which is at this point not confirmed in terms of title, but it will be around property investment. So please mark that and look out And I will strongly recommend you bookmark our events page, because more and more events are going to be advertised there. We will like your suggestions. I know in these questions there has been a request around contracts versus agencies, pay slip, and the income and pensions as well. So those we will arrange in due course. So thank you for those suggestions. We look forward for more suggestions, tax or otherwise. Please do send them to info@jitouk.org. We will love to have you as our member. It is a important community. We are one gens. Together we can make a difference. One some of the things which we are doing is, or initiatives which actually we are very proud of, and from India we are getting a major request to help the youngsters who are coming here for education, help them get settled, find jobs and internships. So your contribution as a member is going to be crucial. You don't have to be a patron or chief patron. You can be an annual member if you are here on temporary basis. But please do join, because soon we will be doing more members only events. This is a reminder. I have received a letter through the mail that I have to do the census. When you get the census, it is due on 21st of March. Please pay close attention to question 16. What is your religion? Please choose any other religion and write Jain. It is quite important for us as a community to make our numbers known, so that we can lobby with the government, we can have our voice heard. So it is pretty crucial and important that you choose any other religion, Jain. Mayan Bhai,
Yes.
so now it is between you and I.
Okay. Let's try. Let's see how it goes.
Okay, I've got quite a few questions, and some of them are around pension. So let me start with that.
Okay.
The question around pension is it possible to withdraw the fund before the age of 55 as a loan or take out a lump sum? And what are the terms and conditions around it?
Okay. Again, as I mentioned, the pension, and it depends on the scheme when it's where it's been invested and what are the rules. And it's always good to speak to your pension provider, because they should be able to give you a very good breakdown of how much you will get taxed if you withdraw this, and how the future payments will also help. Is there is a tax implication, of course, and then you also have some tax-free amounts to withdraw, but they would be able to, because as I'm not very expert on the pensions, but over the years I've learned is there so many rules, and even if I need to go for my own pension, I still have to think and read it again. But talk to them. The providers are very helpful, and they will advise you about.
And I know from personal experience, having spoken to quite a few advisors, it is mind-boggling. So I I can vouch for it that Mayanbhai will be sitting here for days if he was to try and answer each and every detail of pensions. Other questions, and these two questions are related. Can an employee ask the employer to put the pension in his personal SIP or personal pension or private pension rather than auto enrollment? And I'm merging three questions here.
Okay, my understanding of this, that auto enrollment, if you are eligible, then of course employer will have to put it into there first. And if you don't want, then you can opt out of it. After that, if you are recommending the employer that instead of this contribution, can you make my contribution into a different pension, then employer is not obliged unless it's part of your contractual term, because once you opt out of that scheme, is entirely between yourself and your employer that how they want to proceed. I'm sure most of the employer, if they would like to retain the staff, and they would honor it, but it's on their discretion unless it's written into your employment contract.
Thank you. I personally had an experience where our company decided that the cost of doing individuals' pensions and contributing in different ones is prohibitive for a small company. So that might also play a role. So please talk to your employer, as a man by said. Two more questions. One is, if I'm working here and earning here, and I decide to retire in India and stay there, will I get my pension from here? And that, I believe, also includes state pension, not just private pension.
Okay, right. Um, I believe, personally, I believe, and again, I cannot vouch onto it because I've not experienced myself yet. But I have heard the people that even some people have retired at the different locations, and yes, they are still receiving the pension which is been invested. Uh, Again, it depends on the rule of that pension and what are the eligibility of it. For example, let's say, just linking to the question of ISA, for example, as soon as I become a non-UK tax resident, I'm no more allowed to put anything more into the ISA, but whatever is there is still counted there as a tax fee and I don't have to pay that. But if I withdraw out of it and then I decide, then is done. So there would be limits, there would be some rules on each of the individual one. There are possibilities of receiving them, and I hope it works. Then when I get retired, then I don't have any problem with that also.
Mahenbhai, don't be too modest. We know where you are retiring. Um, right. Few questions around NI now.
Okay.
For the women, NI contribution gets impacted for periods when they leave employment to take care of the family.
Yeah.
What suggestion is there uh, uh, to close the gaps in the years in terms of NI contributions?
Okay. So one of the very good arrangement HMRC has that even if you're not eligible automatically by your employer to deduct the NIC, you can still opt for volunteer NIC contribution. And at that point, you need to just complete the HMRC's the paper, like the online procedure, and either you can pay it annually or set a direct debit, or some things which is then contributed whatever the amount you want to contribute for. I think one of the problem would be that how many uh, I, I actually in my career come across this question first time, knowing and doing pay slips for so many uh, female staff members. It's about the awareness when someone is changing the life and the life is developing further, whether they're asking the tax related questions or not.
Uh, in your presentation, you mentioned that as a director or as an employee, even if you pay yourself a pound, your NI contributions and all that are safeguarded, or did I misunderstand that?
Okay, so as a director, so every employee is subject to national minimum wage. So we cannot pay an employer cannot pay an employee less than the national minimum wage. But the directors are exempt from the rules. Okay. Now,
Okay.
a lot of time I come across, let's say one of my friend has opened the company and he thinking that instead of me paying through the salary, I will just withdraw things as a dividend. And the bit I was trying to express there, that if you are not withdrawing any salary, also not doing your NIC volunteer contribution, and dividend what you will get are not going to be, there wouldn't be any NIC. So you are actually going to miss out the qualifying year tax in the state pension calculations. It's similar to what the question you asked earlier about the female staff member, because they are going to have a vacuum of the few years. And if just to make this is like in a general term called an optimum tax optimum salary for a director. So as far as they are coming about the first limit and staying up to the secondary limit, they pay no NIC or very small NIC if they withdraw a little bit more, but they are qualifying for the state pension. So every year they're getting text saying, yes, this person is qualifying for state pension. What amount they will get, it entirely different calculation, but at least you are getting qualified for that.
Okay. The next question, I think you have already answered, but I will quickly run it, and you can. So basically, if I take a job outside of UK, what is the recommendation regarding NI contribution to ensure the pot is not affected? I think the answer is a voluntary contribution.
Yes, and you also have to see whether your own tax residence status just be about, because as you start working, whether you're going and living there and working, it get a lot complex when you are working, when you are actually physically working abroad, and the time limits and everything. But yes, if you want to keep your, then the volunteer contribution is one of the option.
Thank you. As a landlord, and that is the sole source of income
Yeah.
from letting properties, I do not pay national insurance. Is this correct?
So you do not pay less. So first is less your business and yourself. Let's think it two separate things, because if you are a self-employed landlord, on your the tax returns you should be paying some sort of NIC on your profit. Unless you're making zero profits, then of course you're not paying any kind of an NIC, and you should opt for, you can think to opt for the volunteer contribution. Yeah, that's the place. Unless if you want to process your payslip, then you can still register as an employer. You don't have to be a limited company to be an employer.
Okay. The second part of the question, how to protect NIS, already answered, as in you can do voluntary contributions. Okay, moving on from national insurances. Limited company does not make enough money to pay the directors. Does it still need to be registered as an employer?
If you don't have any other person employed, so you, I assume that you are the only director and shareholder and working person of the company, and there is no other staff member, then yes, you can come out of registering as a sorry, as an employer, because you are the sole. But then you need to think about any withdrawals you are doing, would how they being taxed when you getting the money from the company. And most important question sometimes I think when this sort of question comes is, as a director, if you're not making enough money and you're also not able to pay to yourself, is there, and if it's going for so many years, is there a sense of continuing that business? So this is again, HMRC can also think that you've been 10 years and not making the money but still having some, that means maybe something not done properly.
Agreed. Agreed. Um, I use HMRC Basic Pay tool for my company. I am the only director and employee. My payslip does not show that I'm a director, does not show the year to date figures. Is it a valid payslip?
If you're doing through the HMRC tool, I'm sure it is valid. There are some layout plans you can do. Normally, because you're doing through the HMRC tools, it should be, and just check that HMRC tools is also updated. Are you using the one which is out downloaded, or you're still using it online? Just check that there. But yes, those information required, especially if you send your payslip to for any outside, let's say even to your banks, or you're taking a mortgage or anything, they will ask you all of these questions. So it's better to have them on the payslip.
Related question. Is there any governance around the minimum amount of details to be given on a payslip? My payslip does not explain all the figures you have shown on the example.
Most I have not come across any software of the payroll which is not providing this minimum information, unless someone is just preparing themselves manually and still calculating pay slips manually. And I have a good example. One of my accounting professional friend who has given me a lot of training, also guidance, is 92, still practicing, and he's still calculating the pay slips manually, because that's how he's expert on it. But whether he's updating his format and everything, so
Okay. Um, Moving on to benefits.
yeah.
You have explained tax benefits because of working from home. And right now, everybody is more or less working from home. Can you claim more than the actual expenses?
No, no.
How does that impact in, because this is my personal question. I remember I've been working from home since 2012. and I wanted to claim a working from home allowance and all that, but it was told to me that it will have an impact on capital gains if I in future I go and sell my property.
It would, if you're, let's say, working home, if you are going more than 26,000, sorry, 26 pound per month, which is the HMRC's tax, like the allowed working home arrangement. So I have seen some people probably doing a calculation saying, I've got in total my home six to, let's say, eight rooms, and I have a dedicated office, and I'm proportioning all of it. Yes, that is also uh, lot of time acceptable, but that could have an impact on, because now you are using one whole part, dedicating it. So there could be questions whether you registered that part for a business rates. So out of your eight rooms, do you pay seven rooms for council tax and the eighth room for business rate? If you stay within the 26 pound, then yes, I don't think so that has an impact on your capital gain calculations.
Okay, thank you. Um, Mileage is fixed at 45 pence per mile. Then why is car allowance classed as a benefit in kind?
The mileage you pay if you're using your own car, or you're using the company car but you're paying for the fuel and all of this. So there are different rates for it. It's not fixed at 45p. It's an advisory recommended rate. So if your employer is, for example, let's say, for whatever reason, and you are working that profession, and your employer gives you very posh car which actually has more running expenses than 45 pence per mile, and your employers decide to pay you £1 per mile, then that extra is taxable on your pay slip. That should go, or as a part of the benefit kind. Employer can pay less than 45p, because a lot of the car nowadays are efficient, and I don't remember when these rates were updated last time by HMRCs. Probably since I'm studying, I see the same rates. So I'm not being, so of course the cars and everything has been so innovative, and the running is less. The car benefit and kind on car is for having the car from the company. So not you paying out of your own pocket, because company is paying for the car, and maybe sometimes company is paying for fuel, or you are paying for the fuel. So if you have the company car and you're paying for the fuel, you can't charge 45p. There are different rates depending on the size of the engine and various different combinations of it. If you are getting 45p, then you could be taxed at some point whenever HMRC looks at it.
Fair enough. Um, why are visa expenses taxed? Why do employer need to gross up, as that is a visa I feel is required to do the job?
Again, there is no rule on this. Of course, Home Office rule is that yes, you should have a visa to work. So that's further an entry. However, business in can decide to either charge the candidate, saying because I'm helping you to come here and I'm processing, and that's the cost of the business. They could either not charge the employee and expense it, the full cost, into their own business expenses. Is entirely the discussions between yourself and your employer, how you agree the terms with them.
Thank you. Would a salary sacrifice benefit in future when accessing a pension too?
um Again, salary sacrifice is used for your, like, paying certain things. For example, even let's say car is also a good example, that you could decide to pay your car, and especially let's say if you're deciding the electric car to pay through the salary sacrifice, it could be beneficial for tax beneficial option at this point. I am not aware how this will affect the pension, because when you withdraw the pension, if I understood the correction question correctly, you probably not be working, so you wouldn't have a salary unless you are still like in the employment and withdrawing the pension. At that point, yes, the pension would get added, as I remember correctly, into your total income.
I've got quite a few more pension questions. So what I'm going to do is I'm going to ignore them for now, and I apologize for it. We will arrange a pension a specific session later on, so please bear with us. Um, this question, you touched on ISA allowances for individuals. Just for clarity, There is a different allowance for minors, anybody who is below 18.
Okay. Hmm. I
What
will
is
have
that?
to check.
Okay.
I have not got any minor client at the moment for whom I will look for it. But I can check and send the update back to Anurag and then he can send the information to the person.
um, I personally, I did have a junior ISA for my daughter, and recently it has increased to £9,000, I believe, for minors. Previously, it used to be around 4,500, something like that. Please do not quote me on that, but there is allowance available for junior ISAs as well.
Thank you, Anurag. I learned something new today.
I'm not accountant. I'm
It's
just
good to
cautious
know.
of
I've not
not
done
paying
this for sure.
HMRC too much money. Um, this one is from me. I read an article sometime back where the tax code was not adjusted. So, if my memory serves me correct, the individual had grown up kids now and was no longer eligible for the kids allowance or child allowance, whatever it was. But HMRC did not change the tax code for 5 years. How can we make sure our tax code is correct?
The best thing is to look at your pay slip, because that's the only time someone who is starting their career life first time, the only way for them to know about their tax understanding is look at the tax code on their payslip, because as before starting the career they wouldn't have even thought about a tax code. So that's where, and if it's, and do a bit of search, like for example, if suddenly your first pay slips instead of current tax year code is 1250L and your first pay slips comes with just 1000L, then of course there is some sort of a correction in it. The sooner you spot is better, because you can go to HMRC, ask them to correct it, and then you get your tax affairs sorted. A lot of time this thing also happen once the tax year is completed and they start the next tax year. Normally, if the tax code adjustment is done between the year, during the year, you get your tax repaid through your pay slip, next pay slip. So if you have overpaid the tax, your employer will have the payroll system will process the refund on the pay slip. Your employer will claim from HMRC and pay to you. If you have already finished the tax year and it affecting the previous tax year, then your employer can't do anything further on it unless it's a very specific case or circumstance, but if they made a mistake. But best to contact HMRC, discuss with them, and there are some forms to fill, going back to some years of the history experience I had. And then HMRC reviews it, and then hopefully they send you the fund back. Maybe they'll put top up some interest, whatever the rate they pay.
Best of luck with that. Uh, Tax code for people who have multiple jobs.
Yes, it's okay. So tax code normally, let's say if you're using, let's say you got 1250 L tax code, which is 12,500, and if you use this job with let's say two employer, and both of them are running it, that means technically, effectively, you are getting 25,000 tax-free income in a year, because their system will not tax your earnings according to those threshold. And at some point now, of course, before the RTI system, this all used to happen after the year end submission. Employer completes year end submission, HMRC receives all the informations, and their computer calculates it, and you get a letter saying you have underpaid the tax. Nowadays with the RTI, and if the employer is following the RTI process properly, this should be picked up within a month or two, not more than that, unless the computer system at either end has made some stupid mistakes. So HMRC would advise any one, like, keep the code of one employer and advise others to use the BR code, or you can talk to HMRC and say, can I split my tax code? But no matter how many jobs you have, your tax-free allowance is limited, so it's not per job, it's for you.
Okay. I've got other few questions. So I'm going to, actually, most of them are related to pension, so I'm going to ignore them. One of them is about best ISA option. That is for financial advisor, I will say, if you
Yeah.
agree with me. So I'm going to ignore that. Um, and then there is about contracting, which we will cover in a different session anyways, contracting and agency. So thank you very much, Mayan Bhai, for very informative, very helpful conversation. I hope, and based on the chat I'm seeing, people have enjoyed it thoroughly.
That's good. Thank you very much for everyone, to all of you for your time and this opportunity, and wish you all the best. Hopefully, this information helps you for your own planning. Thanks.
I would like to invite Shubham to do vote of thanks to our esteemed speaker.
Thanks a lot, Anurag bhai. And thanks a lot, Mahindra bhai, for that insightful talk. I can personally vouch this session has been extremely helpful. In this world, as it said, nothing is certain except death and taxes. This session definitely helps shed some light on the more mysterious of the two, arguably taxation. So this morning, as I was thinking about this very special event, I wondered whether there have been any popular sayings around a, I would say, a relatively dry topic like taxes. But to my surprise, the first search result that I got, it had 130 inspirational quotes about taxes. So that was just the first result. And of course, the one that I like the most has already been quoted a couple of times towards the beginning of the session. That is from Albert Einstein himself, that the hardest thing to understand in the world is income tax. But given the fact that it has already been mentioned, so probably I'll quote the second uh, best that I found on that list. It was by Arthur Godfrey. He's a US television personality. And he said, I'm proud to pay my taxes. The only thing is, I could be just as proud for half the money. So, very, very nicely captures the feeling that all of us have around the taxes, I guess, um, in very plain and simple fact based fashion, which makes me actually come back to you, Amendra Bhai, and the fact that you have explained the entire concept in such a second manner. What I observed was you starting right from the very basics, starting from okay, how to read your tax code to all the different ways and methods for salaried, non-salaried directors. You explained it in such a second way that it has actually made it very useful for everyone here today. And I'm sure everyone would have benefited through at least one topic or the other, or maybe many for people like me who have, for example, transferred from India only recently, I would say. For them, it has been extremely helpful. So thanks a lot for that. And once again, on behalf of entire Jito organization, would like to thank you for taking time in delivering a topic of this immense utility, and hoping to see you again. Thank you.
Thank you, everyone, for joining us, and we look forward to seeing you in future events. Thank you.